Hey everyone, welcome back to Financial Freedom Friday, where we discuss tips and strategies to help you achieve financial freedom. My name is Nate Scott. It's great to be back again. Today we're going to discuss something pretty exciting, and it's something Robert Kiyosaki calls turning liabilities into assets. Now, I don't know if you know Robert Kiyosaki. He's the author of the Rich Dad, Poor Dad series, has a lot of great books and material. Outside the box thinking, I love him and what he writes, and it helps a lot of people. I don't know if you've heard from him. If not, you should go check him out. But anyway, when he says turning liabilities into assets, I believe he's probably most of the time referring to borrowing money from a bank to go buy an asset, maybe a rental property, or to help you fund something in business, something like that, where the asset that you purchase will actually produce a profit far above and beyond what it costs to borrow the money. And so that's what he's talking about when he turns liabilities into assets, for the most part. But I wanted to bring something that I think can relate better to the average person, because not a lot of us have those types of assets. Not a lot of us are doing those things. If you are, great. I encourage everyone to do that type of thing and to really focus on using the bank as an asset to you. But most of us just have liabilities. That's all we have. We haven't been thinking in that way. So we've got, and before I go into it, I think I should define it for, assets, liabilities, fancy words. An asset, Robert Kiyosaki, and I agree with him, describes as something that puts money into your pocket. A liability is something that takes money away from your pocket. And so when we're talking about liabilities and assets, most of us just have a lot of liabilities. I mean, when you think of, the car loan, that takes money out of your pocket each month. The mortgage, the credit cards, the student debt, the business debt. I mean, we have all these different liabilities that we owe up money on, and we're making payments, writing checks out. And every time you make a payment to one of those liabilities, you have less money than you did the day before you wrote the check. So, in other words, it's taking money out of the pocket. Every single one of the payments you've ever had is essentially a deposit into somebody else's account, and the money's gone. But we'd like to share with you today, what I'm trying to get to is that there's a way that you can turn your liabilities into assets. And that's why it's the greatest thing you could do is start to focus on owning your own debt through this concept we call becoming your own banker. And so what I'd like to share with you today is how you can use a life insurance policy to essentially create a debt that you own, and you can profit from it and turn the liability into an asset. So here's how it works. Let's say, right now, let's say you have a car payment. It's $500 a month. And you're just normally writing that check out. As we said, every time you write the check, you have $500 less. That's why we don't like payments. That's why we don't like that, because we have less money because we're sending it all to the bank. And so you've got this payment, and you say, I might give Nate a chance here to, let's see what he's actually talking about with this whole banking strategy. So you open up a policy, you build it up, and now you have enough money to take over the car loan that you owe. Let's say it's like $25,000 on the car. And we now have $25,000 in our policy, and we borrow against our policy to pay off the car loan. And we start making that same payment, what used to be a payment of $500 a month. Instead of going into a bank, we just start sending that back to our policy. So you haven't changed your lifestyle at all. You haven't changed your cash flow. The only difference is where you're sending the payment to. And whereas it used to be going money that was leaving your pocket, now every time you write that $500 car payment, it's just back sitting in your policy where you found it. And so each and every month that you used to be getting $500 a month taken away from your overall financial picture, now you can have $500 a month be adding back into your financial picture. You get all the money back for those payments, essentially turning the liability into an asset. But not only that, the reason we use the policy to do this is we don't just want to have our money back. We want to get all our money back and make a profit. And the power of it is inside that policy, the cash value is going to be earning interest and dividends the whole time, whether or not you borrow against it or not. So by the end of the time frame, not only have you gotten all your car payments back, because you're now the bank, but you've made a profit on it. You've gotten more than what you've put into it. So you've really turned a depreciating asset like a car into an appreciating asset where you have all the money plus a profit back at the end of the term. Totally different way to live. It can take a little while, especially even for those of you who are practicing this with us, to have this click in your brain. But it's a powerful thing to be able to turn liabilities into assets and to own your own debt and profit from it. It also makes life pretty simple, I would just say. Being able to fund everything on your own makes it more peaceful. And that's what we want to help you do. It's much easier to achieve financial freedom if banks aren't getting all your money. And remember, if you don't fight for your freedom, nobody's going to do it for you. So let's get to work. We'll see you next Friday.